Today, I wanted to share with you a bit about Google's second quarter earnings. Of course, Google has been not one of the popular stocks among the Mac 7, which is consists of like Amazon, Meta, Nvidia, Tesla, and all the big Microsoft and all those stocks, because a lot of investors are thinking that Google relies a lot of from its business from cloud revenue as well as search, and the thirdly is the advertising, and of course fourth is the YouTube, and then the second and third part, which is the search and the advertising, right? Which of course there's been huge competition by those generative AI chats like OpenAI's Chat GPT, Grok by Elon Musk. So user might actually divert and go to other platforms to do search, and of course at the same time advertising revenue would also be shared to other um, search platforms as well. So of course, that being said, um, people are expecting that the Q2 for 2025 for Google Alphabet is going to drop, but that didn't happen. So basically, y- basically Google did very well in the search and also in the advertising revenue, and of course, their YouTube and as well as the cloud uh, did very well. Those are quite a safe bet. You know, the Google Cloud business is actually a recurring business, and the switching cost is quite high. Once you sign up to Google Cloud, you tend to stay there. And recently, they increased their um, monthly subscription fees, and so their revenue has increased for Google Cloud. And then the second part is of course YouTube. Well, that only contribute to around like 10% of their revenue, which comes to around 9.8 billion. Of course, second quarter for Alphabet total at 96.4 billion. So it's only about 10%, but it's actually looking well as well, the advertising on YouTube. So, but back to the most contentious revenue stream would be the Google search and the advertising, um, which many people expect that to drop because of OpenAI and Grok and many other AI platforms coming in to compete to capture the audience attention. But of course, we see that it's still doing well, have a low double digit growth. So so basically, uh, Google Alphabet is still having a moat in these four areas, and the meaning of a moat is actually a distinctive advantage a company has over its competitors, and allows it to protect the market share and profitability. So, yeah. So back to other things about Google Alphabet may have potential ahead in the years ahead is of course their investment in robotaxi in Waymo. That has not been priced into Google's valuation at present. Google is still a 2.4 trillion company with giving out 5% dividend, and of course, Waymo is actually expanding in different states in the US, and by partnering with Uber. But recently, last few days, they actually started their new venture in Dallas, and they are using their own apps for users to use. So this is one of the future growth that we can probably see from Google. And of course, the next one is their ownership in SpaceX, which SpaceX is currently valued at about 10 billion, and they might be going listing in Nasdaq or NYSE sometime this year, and it might be 100 billion company, and that valuation as well has yet to be um, valued in Alphabet, because Alphabet basically have four main business, and they also have many technology ventures. So these technology ventures, one or two of them might spun off to be from a startup to become a matured companies. So so basically, yeah, the Q2 revenue beats analyst expectation, 13% year over year, 96.4%. So their advertising revenue are still one of the biggest. And just to share with you this data, right? Uh, Google parent company Alphabet is the world's most profitable company and the largest advertising firm by revenue. In 2024, Alphabet generated a staggering 265 billion in ad revenue, surpassing Meta and Amazon. To put it in perspective, Google alone earns more from advertising than Meta and Amazon combined. So you can see that actually Meta is a pretty, I mean, Google is pretty much a good company, even with all these headwinds coming in, um, like, you know, OpenAI, Grok, and the Chinese one, I can't remember the name. So still looking well. So yeah, it's a good stock to invest right now. It's about 190 US dollars. One of the cheapest one in terms of PE ratio compared to other Max 7 companies. Thank you.